In this video, we're going to talk about how to get 100x returns, and it's probably not what you're thinking. I'll show you a completely different way to do it. It's incredibly valuable and it will make you wildly successful. Let's get into it and let's run the numbers. One of the most valuable rules that you'll come across is Rule 271. You don't have to make big percentages to make big percentages. Members of the CTKS Global family know this very well. This is our focus, but what exactly does it mean? When it comes to trading and investing, you'll often hear about 100x returns. This is pretty much a benchmark. Now, what does it mean? 100x, your initial investment is X, and 100x is 100 times your initial investment. Pretty straightforward in actuality. Now, how does it work? Say you had $100, just pop on 2 extra zeros and it becomes 10,000. That's a 100x return. Let's use a real example. Say you had $1,000. To get 100x, you would need to put on 2 zeros. This 1,000 would become 10,000 and then 100,000. Now remember, we're talking about returns here, so we're focused on this figure. You can see the return on investment is 10,000%, not too shabby. Let's go back and check our logic. Return as a percent, 100x return is equivalent to a 10,000% return. Okay, check. The really important thing to note is how long it takes to make this 10,000% return. If you made it in a year, it would have an annualized return on investment of 10,000. Sounds pretty sensible, doesn't it? And the total value of your investment would go to 101,000. Remember, the return is 100x plus your initial capital. So what the heck is Rule 271 about? You don't have to make big percentages to make big percentages. You might say, Ken, this makes no sense. Okay, let's break it down. Say you had that same $1,000 and you made a staggeringly large 2% return. But you did so across one day. And then you kept on doing that day in, day out for 365 days. You can see the annualized return on investment is a little greater than 10,000. In fact, the return on investment would grow, the value of your investment would grow up to $1.384 million. That's all on 2%. Hang on a second, there's something in this. So that's what it means. You don't have to make big percentages to make big percentages. You can just make small percentages and do them frequently. You don't have to do them every day. It depends on what the market does. But if you keep on rolling that percentage over when the market allows, you can see you can make some incredible gains. And it's a lot less risky than waiting for a 10,000% return. Okay, this is getting really interesting. So instead of waiting for a 10,000% return, we can wait for a 2% return. It doesn't even have to be 2. It could be 1.5%, could be 2%, 3%, doesn't matter. But how do we turn and burn these small percentages? I'm glad you asked. There's a secret to it. The school system will tell you how to calculate mathematics, how to do physics, chemistry, home economics, whatever the heck it is, but they don't teach you how to make money and how to keep money. Naughty school system. In order to turn over small percentages, we need to know where the structure is inside a specific chart. Now, what is structure? Structure is where smart money will buy and smart money will sell. If we understand that, we can move with the larger players and not get crushed by them. That's the key. Now, how can we do that? We just mark up the chart through all of price history with the CTKS method. Let me pop on this indicator and it will help you to understand how we could have made small percentages in the past day or so when it comes to Bitcoin. The thing to understand, Bitcoin is like the slowest mover in the crypto market. What we always want to do is to buy safely. For example, you can see here we were in a downtrend. We've got smart money support levels coming in. These are called true structural support levels, also known by the term Stanfield levels or CTKS levels. Here, smart money is going to slow the descent of price to see if these levels hold. If these levels hold, they will reflect it back to the next structural level above. Of course, if that holds, they'll seek to bring it up to the next structural level above that. Now, what does it mean? If we were looking just at Bitcoin, and Bitcoin moves the least percentage amount of anything inside the crypto market, but it's a pretty good investment. And if you're investing and also trading, you can do incredibly well. So what we see here, just say we bought around here and we sold around here. That's your 2% return and a little bit of cream on top. But you might say, Ken, I could have ridden it all the way up to here. Well, in fact, you may have been able to do that. But we're just looking at a nice, easy grab of a 2% level. Okay, what about this level? We saw this level just convert itself into support, and it's also rallied just a little bit over that 2%. Remember, all you have to do is just do these 2% trades and you're going to do really, really well. Smart Money knows all about compounding, all about how to calculate percentages, and all about structure. This is closely guarded information. What about if we were looking at something like Ethereum? Again, we must know where Smart Money is buying and selling. The best way to do that is to mark up your charts with level 1 and level 2 standard certification. But we won't worry about that at the moment because I'll share these levels with you on a day-by-day basis. If you want to mark up different charts, you're very free to do so. Learning and investing in your skills is vitally important. So you can see through here, there is a level of structural support. If you bought at this level, even though price went down below it, but you just bought here and were seeking your 2% gain, you would get it. In fact, it could go over 4%. And then if you sold there, remember this is all about trading, turning over those small percentages. You're not waiting for Ethereum to go up 10,000%. Whoa, you're waiting for ETH to go up 2+%. And so if you bought it just again where you bought it previously, you could make in excess of 2%. You could make in excess of 7%. One key is to not juice your trades. A lot of people want to sell the absolute top and buy the absolute bottom. This is not required. What you want to do is to be safe with what you do. That sometimes means that you've got to wait, and that is okay. Knowing where Smart Money is buying and selling is incredibly important. For example, when we look at Solana, we've marked up all of price history according to level 1 and level 2 standards. And that means at that 170 mark, there is so much overhead structural resistance. Now, what does that mean? It means that those Smart Money players inside Solana will be selling this specific level. Now, what does that mean? When price is below, you'll notice the percentage on Solana is far less than what it was on Ethereum and also Bitcoin. This is the reason why. It's very important to know the structure. What happens typically is that people just guess. They look at a particular chart and they say, oh, I've got a feeling. I'm just going to go in here. I feel good about it. Smart Money doesn't feel anything. They analyze. To be Smart Money, we have to get rid of emotions. Emotions will just decimate your trading and your investing account. Now, if you bought at this level of structure, it did have a 2+ return up to this level of magnetism. If you bought here, we had nearly, well, you could say it slightly went above that 1.9%. So you could have squeezed 2% out of it. But what was the problem? The overhead structure was the problem. Smart Money knows it's here. And of course, if that converts into support, that's going to supercharge future price returns. Therefore, you can't only just know where it is, you need to understand what it means as well. How could this relate to something like Doge? Let's check it out and let's pop on the structure. We can see the structural levels throughout Doge fairly clearly. So if you bought around here and you sold around there or even higher, there was literally an in excess of 5% return on it. And if you bought when you saw the price was turning around, just say around here, there was it would be a 4% return because you could just place your sell a little bit higher. These particular levels are not brick walls, they're gravitational areas. But you can see across so many different price charts, the concept of pulling out 2% is absolutely possible. And remember, the markets are unlimited opportunity machines. If you know what you're doing, if you have the knowledge, you can do incredibly well. Just take your time. You don't have to be just chasing every single wave. You just need to wait and make sure that your wave that you chase is reasonably successful. Our community is all about borsogging. Now, what the heck is borsogging? It's buying on red, selling on green, but you don't do it mindlessly. You must understand where the trends are changing and then just pop on the trend which is appropriate to profitability. It's very important that you have a scientific approach to how to get into the market and how to get out of the market. If you've done the profiting course, you know exactly what I just did. Let's have a quick look at ADA. Everything comes down to structure. If you understand structure, you'll understand literally everything. Structure is incredibly important. But how profitable is it? Well, let's just pop it on and check it out. What we can see inside ADA's price history, if we were buying around this really bulletproof area, around that 71.90 area, we would be doing very well. And if we were just selling this area up around 74.70, we would be doing well. Could we get our 2%? Well, that's in excess of 2%, isn't it? What about this one? Yep, that's in excess of 2%. That's also in excess of 2%. Now have a look at this. There's a lack of overhead structural resistance, so ADA could actually pop. Of course, we know everything is intercorrelated and interconnected. How ADA goes is dependent on so many things. Too many things to just go into at this point. But the concept is you can make those percentages if you know where the structure is. Hopefully, this explains Rule 271 a little bit better. You don't have to make big percentages to make big percentages. All you need to do is to turn over small percentages frequently. A lot of people will tell you you must chase the 100x return because it's so cool if you think about it. 100x return, oh, that sounds fantastic. Yeah, I would like a 100x return by minimizing my risk. I don't want a 10,000% return, I want more. And it's fine to be ambitious inside financial markets. Remember, you don't take from anybody else when you profit. How markets work is incredibly straightforward. Markets just pull all the money and pay the people who know and take from the people who don't know and put it back into the pot. Now, what typically happens, people get into the market for thousands, millions of different reasons, not just your reason. It's not the opposite. Some are going long, some are going short, some are hedging, some are doing all sorts of things. Some are scalping, some are day trading, some are swing trading. Some are not trading at all, they're just investing. So when you make a profit, you can't automatically think that you've taken from somebody else. Just think about it this way. If you make a loss inside financial markets, you learn a lesson. That's called a market tuition cost. And you will make those costs because you have to invest in your education. You can either pay exorbitant market fees or you can learn how smart money thinks. And this is how smart money thinks. Smart money doesn't risk like retail does. They're not holding on for 10,000% gains, they're just churning and burning small percentages all the time, and you can move with them. What you will find over years and years, the only thing standing in your way is you. You'll either find a way or you'll find an excuse. There's no two ways about it, and that applies to everything that you do in life. Life is always waiting for you to be ready for abundance. The key is this word, ready. Please let me know in the comments what crypto charts or stock market charts or whatever other charts would you like me to cover in tomorrow's video. I'm here for you. I want you to succeed. I want you to be more of a financial and emotional blessing to yourself and those you love. Keeping positive is really important, and don't forget, happiness is on the other side of showing kindness, integrity, and gratitude each day. And if you're going through a life pullback, our thoughts and prayers are with you. And always remember, those life pullbacks will give you the strength for the next life rally. If you stay dedicated and committed, if you win or learn and never blame, you're going to make it, and you're going to make it big. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.